What if I told you there's a playbook to building the next trillion-dollar empire, and it doesn't start in Wall Street, but in your bedroom? BlackRock didn't become the world's most powerful financial entity overnight. Behind its trillion-dollar portfolio lies a precise series of moves, strategic decisions, government connections, and a silent takeover of global assets. In this video, we'll dissect every step, from humble beginnings to global domination. And by the end, you'll know exactly how to build a company like BlackRock. If you dare before we talk about building one, we need to understand the machine we're replicating. BlackRock isn't just an investment firm. It's the architect of modern finance. It manages over $10 trillion in assets, more than the GDP of every country except the US and China. It owns chunks of Apple, Amazon, Microsoft, and Google. And through its secret weapon, Aladdin, a massive AI-driven risk analysis platform, it doesn't just participate in the market, it shapes like T.S. Oh, how did it start? BlackRock's founders didn't aim to be a bank. They aimed to solve a problem, to manage risk better than anyone else. In 1988, Larry Fink, once fired from First Boston after losing $100 million, gathered a small team. Their vision was radical: build a firm focused not just on returns, but on risk management using emerging technology. Lesson: you need a mission that solves a massive pain point in finance or capital markets. Not just make money, solve something fundamental, like risk, transparency, or liquidity. Fink didn't hire random people. He recruited 8 experts, all with deep backgrounds in finance, systems, and analytics. Their strength wasn't capital, it was competence. You don't need hundreds of employees. You need a team that understands quantitative modeling, market systems, investment structures, tech infrastructure. In today's world, pairing finance with AI, blockchain, or data analytics is the formula. Find 2 to 3 co-founders who complement your weaknesses. Hire slow, build fast. While most startups target retail investors, BlackRock flipped the script. They went straight for pension funds, insurance companies, and governments. Why? Because these clients manage billions and are desperate for risk-managed strategies. You must speak their language. That means understanding portfolio theory, offering customized reporting, having airtight compliance structures. This is the B2B of investment empires. And the bar is higher, but so are the payouts. Enter Aladdin, asset, liability, and debt and derivative investment network. Built in the 90s, this internal system revolutionized how BlackRock made decisions. It simulated billions of market scenarios, measured risk across portfolios, and gave clients total visibility. It became so powerful that other firms started paying BlackRock to use it. If you're serious about creating a modern BlackRock, you'll need your own risk management software, portfolio analytics tools, AI modeling platforms, or better, build a SaaS model that sells the platform alongside your management services. BlackRock didn't IPO until 1999, 11 years after founding. That was intentional. They wanted control, freedom, flexibility. Private capital plus silent partners equals long-term strategy wins. Raised from smart capital, angel investors, family offices, or strategic institutions who don't rush short-term exits. The goal: scale first. Go public when a story is too big to ignore. To grow fast. BlackRock didn't just build, it bought. Their biggest move: the $13.5 billion merger with Barclays Global Investors in 2009. That added iShares ETFs, giving them a stronghold in passive investment products. Copy this model. Don't reinvent everything. Acquire small players. Niche tech platforms, boutique hedge funds, specialized research firms. This boosts your capabilities instantly. Here's where BlackRock truly became untouchable. During the 2008 crisis and the 2020 pandemic, the Federal Reserve hired BlackRock to manage bailout operations, bond buying, and even liquidity programs. That's next-level trust. To reach this point, hire top compliance officers, build government relations teams, offer transparency, not secrecy. Your company should be so reliable, central banks ask you to run their show. But here's the catch. This isn't 1988. The barriers are higher. The financial space is saturated with VC-backed fintechs, AI-powered robo-advisors, and trillion-dollar giants. Governments are more cautious. Regulations are tighter. Data privacy is critical. And the tech arms race is brutal. Don't call yourself an investment firm. Start as a tech-enabled wealth management platform. Create a user-friendly platform that uses AI to analyze portfolios. Suggest tax-efficient investments, automate, rebalancing, manage risk exposure. Tools like ChatGPT APIs for client interaction, Snowflake for data, warehousing, Stripe/Deal for global payments, and hiring start with affluent retail investors. Then scale up to institutions. Most startups run from regulation. You must embrace it. Register with SEC, US, FCA, UK, SCCP, Pakistan, if local, get ISO certifications, do annual audits, and publish them. Transparency becomes your moat. Skip VCs obsessed with fast exits. Go after sovereign wealth funds, UAE, Norway, Singapore, pension funds, insurance corporations. Pitch your platform as the next-gen risk engine. Not just an asset manager, ETFs made BlackRock unstoppable. Partner with an investment bank and launch your own ETFs. Green energy, AI-powered industries, emerging markets. Use your tech to rebalance portfolios automatically. Sell access to your platform as a white-label product. BlackRock publishes macroeconomic outlooks that shape national policies. The same. Hire economists. Build a research arm. Release quarterly reports. Present in global economic forums. Let your insights guide investor behavior. You become the source, not just the service. Now, imagine this. Your platform manages over $500 billion. Governments are calling. Investors follow your reports. Your tech is licensing out to 200 firms. And the Federal Reserve, they're asking you to help design new market interventions. That's not fiction, but that's exactly what BlackRock did. And now, you've done it 2.so. How do you build a company like BlackRock? Start with a bold mission, build a genius team, target institutions. Not retail, create proprietary technology, stay private. While scaling, acquire, strategically embed into national systems. It's not fast. It's not easy, but it's possible, especially if you think like Larry Fink in 1988 and act like a tech disruptor in 2025.